Well, actually, the euro, we think the ECB would actually lag the Fed a little bit. So that's actually going to be a bit of a positive for the euro in the second half. When it comes to the yen, we have to note that currently where the risk-adjusted return is for yen carry trades, it's actually close to GFC levels. So it's not just going to be about interest rate differentials. Once the rates do start to come down, it will encourage repatriation back towards JGBs. The relative value there is also going to be in the fact that you're going to have higher levels of volatility because growth is actually going to start to become weaker, and that's global growth. So that high volatility is also actually going to cause the quitting of yen carry trades, and that's going to be a source of strength for the yen. So ECB to lag the Fed a little bit, positive for the euro. And when it comes to DXY, that's 60% of the DXY, euro dollar right there. Then you've got another 10, 15% coming in from a stronger yen as yen carry trades are cut. When it comes to sterling, yes, there's a little bit of stagflation concern on that front, which is never great for a currency with a perennial current account deficit. But it looks like the BOE, given it has more of a inflation problem, will actually lag the Fed as well. So they're your three relative value stories.
Right. I also just want to get your quick sense on what's your top currency trade for this year, David?
We actually are pretty positive, the Aussie dollar. I know it's taken a jump on the back of this announcement of what's happening in China in terms of the stabilization package for equities. But we think the stabilization of growth, combined with the Fed beginning to cut rates and also the RBA significantly lagging the Fed when it comes to rate cuts, that's actually going to be positive for the Aussie. The Aussie's been in a downtrend for 5 years, and a large part of that has been the unwillingness of the RBA to hike rates aggressively versus the Fed hiking rates aggressively. And that cycle is actually beginning to turn this year, we think. So the Fed will start to cut rates, RBA is going to lag it. That short-term interest rate differential is going to start turning positive for the Aussie. So that's actually going to be one of the big trades for this year. Along with the stabilization in Chinese growth, we think peak China pessimism will probably occur in the first half of this year if it hasn't already.